Okay, so yesterday we were working with 15.3 Work Together. This is how far we got. Remember, we are creating the Statement of Stockholders' Equity. The first thing that we needed to do was create the heading, the who, the what, and the when. Remember, this is a 4-year ended because we're going to be looking at the capital stock and the retained earnings for that whole fiscal period. Okay? We started that first section with our capital stock. Our first thing that we needed to write down was the price per share, so we have $1 per share. Then we had to look at the beginning inventory kind of thing, okay? So at the beginning of the year, we had 1,000 shares that were issued. How did we get 1,000 here for our number? We times the number of shares that we have times the amount per share. Now it's only $1 per share, so that's pretty easy math for us. So it's just $100,000 worth of shares that we have at the beginning of the year. Okay, what is the next thing that we need to write down? We talked about this yesterday already. We looked at how many shares we had at the beginning of the year. Now what do we have to look at? How many we issued throughout the year. Okay? So what we're going to label that as issued during current year. How many shares have we issued this year, during the year? 10,000. If we look back in our directions, it says that the corporation issued 10,000 additional shares of capital stock. So 10,000. How much are those worth then? They're still $1 per share, so how much are they altogether? $10,000. Again, easy math. We issued 10,000 more shares at $1 per share, so we issued $10,000 more worth of shares. Okay. Now what do? We need to add them together. What is that number going to be labeled? Our balance. Okay, this balance at the end of the year. So we're going to say balance December 31st, 2013. How many shares do we have? 110,000 shares. Oops. That have been issued. Okay, we had 100,000 at the beginning of the year. We issued 10,000 more. That gives us a total of 110,000 shares. They're $1 a piece. So how many shares? How much worth of shares do we have? 110,000. So when we add these two numbers together, we get 110,000. When we look at how many shares we have at the price per share, we should get 110,000 as well. So that's a way to check your work there. Okay, we are done then with our capital stock section because our capital stock right now is worth 110,000. What's our second section of the Statement of Stockholders' Equity? Retained earnings. So we're going to write that heading next. Retained earnings. Okay, so we're kind of doing the same thing here. We need to look at what did we have at the beginning of the year. So the first thing we're going to do is balance on January 1st. So what was our balance of our retained earnings on January 1st? Where do we get that number? From our worksheet. So you are going to have to look back on page 397 and 398 was our worksheet. Where do we find that number on our worksheet then? What column is it in? Yes, it is in the trial balance, but we want to look at what number? The balance sheet credit column. It's the same number as it is in the trial balance. We didn't have any adjustments to it. Okay, but we're going to look at that balance sheet credit column. So we have $46,599.48. Do we see where we're getting that? Page 397 on our worksheet. 397. It is line 26, retained earnings. That is our balance sheet credit column. Where do I write that number? In the middle. Good. 46,599.48. Okay. That is our retained earnings at the beginning of the year. What else is going to affect our retained earnings throughout the year?
Net income.
Our net income. Now, we have two different net incomes. We have net income before federal income tax, and we have net income after federal income tax. Which one do we want to write in our retained earnings? We want to write the after. Okay? We want to write the after federal income tax. Why do we want to write the after and not the before? We're going to have to pay more for our federal income tax. So really that net income before federal income tax is going to change, and more than likely it's going to lower. We want to get that net income that we have after we've paid our federal income tax, because that's really what affects our retained earnings. Okay. Where do we get that number? The worksheet again. So we are, yes, sorry, income statement. You really can get it from either place. We have it on our worksheet, but we also have it on our income statement that we just did. So if you turn to page 399, you're going to see your net income after federal income tax. Where do I put this number? In the first column, because I'm going to be doing a little more calculations with this number. So I should have $62,907.35. Did we all see where I got that number from? Yes? Okay. Okay, so what else is going to affect those retained earnings? What else affects net income, maybe? Would be easier.
Why did you put the 62,000, whatever, right, on the last one?
Okay, who wants to answer that?
Wait, what was it?
Why did I put the 62,000 over on the left and not in the middle? I have to do more calculations to that number. Okay. So,
Doing more calculations on the middle one? 46?
yes, but this one we're only doing one more thing with. This one we're going to have to do this and then add on here and then go. Okay, so what else affects net income?
Dividends.
Good, our dividends that we have to pay out. So if we're paying dividends out, are we going to add that or are we going to subtract it from our net income? We're going to subtract it. Okay, so we're going to say less our dividends declared. During 2013. Those dividends declared are those dividends that we are going to be paying out to our stockholders. So we're not going to have that in our net income anymore. That's why we need to subtract it. Okay, so where do I get that dividends declared? Okay. And where on my worksheet? Yes, we want to look at our balance sheet. Okay, so on page 398, that first line, that line 27, you'll see dividends. And over on our balance sheet debit, we have $8,800. That's what we want to put in for our dividends declared. Okay, now what do I do? Okay, I'm going to draw a line, and then I'm going to subtract. Where do I put this number at? In the middle, good. And what is this number going to be labeled as? Let's think of it this way. What are we going to do with these two numbers?
Net increase.
It's a net increase, good. When we think of it, this is our retained earnings at the beginning of the year. But then we have to take into account our net income that we have during that year, minus those dividends that we're going to have to pay out. Okay? But that net income that we have is going to be a net increase to our retained earnings. It's going to increase our retained earnings. Okay, so now what do I do? Good, I'm going to draw a line, and then I'm going to add these two numbers because I have my balance and my net increase. Where do I put that number? In the last column. And what is this number? Look up here. It's my balance. My balance when? At the end of the year, so December 31st. Am I done? Okay, what else do I need to do? Total these two numbers together. So I'm going to draw a line. What is this number then? My total stockholders' equity. Is that all I write there? Total stockholders' equity?
No.
What else do I put?
End of the year, December.
I need to put the date in there as well. So this is saying this is my total stockholders' equity at the end of the year, December 31st. Now what? Double line rule. Yeah. Do we have a specific number that we can check this with? Like make sure debits equal credits or look on our income statement? No. This one you got to be careful with, okay? You got to make sure that you're doing your math correctly, writing your numbers down correctly. Any questions on the work together 15.3? Okay, you can go ahead and do 15.3 on your own. 15.3 on your own.